Okay, what's up, everybody? For those that don't know me, I go by the Swinging Bull in Discord. My real name is Benjamin. Most people call me Ben. Just a little bit about myself. I am prior military, was in the U.S. Navy for some time, was in the advanced electronic computer field, worked on radar systems that detected incoming missiles. So really enjoyed the training and education I got with the service. And then after my service was done there, got a job with a financial services company. After several years, I ended up being district manager of about 35 branches in the southeastern part of the U.S. Did quite a bit of time there. Also received my broker's license for real estate. I've been in real estate for about 15 years now. That's actually was my bread and butter before I really started deep diving into trading. I've been trading for about 7 years now. I'm 40 years old for anyone that's curious. So I've been around for a little bit. And what I specialize in is basically, I like to call them like passive options, or it's kind of like generating income, either off of shares that you already own. There's a way to make money there, or maybe just some cash reserves that you got sitting around, not really doing anything. There's a way to make money off your cash as well. So those are kind of the main strategies that I like doing is I try and keep it as low risk as possible. I'm not swinging for the fences and trying to get home runs every day. I like, even if it's just a couple percentage points a week, or, if you do the math, even 3% a month, is going to give you quite a bit of gain at the end of the year. So the way I trade is, I like low risk but consistent profit. Okay. And I mean, even 3% a month, I mean, that's going to give you a 36% return on your money. And we all know in 2022, shoot, I mean, even 10, 15, 20% return on your money for the year is you're actually outperforming the market here. As we all know, the markets have been in a downtrend all year. I believe the 1 year cumulative return on SPY right now is sitting around negative 15%. So if you're ending the year on a positive note, give yourself a pat on the back. It has been a tough year to trade in. I've been trading for about 7 years now, and I can tell you that this has been a challenge this year, even for traders that have been trading for a while. It's been a while since we've been in an overall downtrend. We've been uptrending in the markets for quite some time. I mean, if you're looking at my screen here, I mean, I'll just go to the weekly chart here. What we're seeing, the downtrend for this year and how long it's lasting, we really haven't seen that for quite some time. I'm on the weekly chart on SPY here, and this is dating back to 2009. I mean, I can even, there was a sell-off. Of course, the '08 crisis that we had, that went on for some time. Towards the end of 2007, started selling off there. I mean, that lasted a good, over a year, of 1 to 2 years there, the '08 crisis. Okay. But if you think about it, we really haven't endured anything like that. Outside of COVID was, we could talk all day about what I think about that. But yes, we did sell off on COVID, but it only lasted like a month, if you guys remember. This was March of 2020. That was only like a 1 month sell off. And then boom, back to the races with the bull run that we've been in for, the past couple decades here, since 2009, over a decade. And, so my point is, we let's get through this year. It's been a tough year for a lot of traders. I know there's a lot of people maybe feeling down and out, maybe second guessing themselves. But I can tell you, if the knowledge that we've learned this year, we had to become more versatile than before. Maybe adjust the different strategies that we're doing, things like that. But if you got through this year on a positive note, congratulations. There's a lot of people weren't able to do that. And if you didn't end on a positive note, you're not alone. Okay. Lots of people have struggled this year. But if you made it through the year, congrats. Let's start next year off with a bang. Okay. Let's take everything we learned this year and let's make 2023 the best year to come. Okay. We have to stay positive. Maybe it was the military that taught me that. It's just the drive and the go get 'em attitude. And, um, it could be worse. Of course, it could be better. But let's take everything we learned in 2022 and let's start 2023 off on the right foot. Okay. Maybe not making the same mistakes that we made this year. Maybe not over allocating as much, things of that nature, things to make sure that we're protecting our capital. We could always everyone can always do better with that. Okay. Because we're only human, and we have, emotions and things of that nature. So, I focus on, making money with our money or making money with our shares. Okay. And, just to kind of, as an example, let me go to the Apple chart. I like talking about Apple. It's just a good example to use. But, let's say you picked up some shares on Apple, and I got the 30-minute chart pulled up here. Maybe you picked up some shares yesterday, or when Apple came down to let me go to the 1 hour chart here. When Apple came down let me go to, probably daily is probably going to be better here. Yeah, when Apple came down to the 120s, 130s earlier in June, maybe you've been accumulating shares down there. Let's say you have now you've got 100 shares of Apple and your cost basis is below 135 because you picked it up at these two bottoms over here. Easy way to make money is, we'll go to the option chain. I like to go 30 days out, so we'll go 30 days out. And I won't deep dive into this too much, but I just want to give you an example. If you had 100 shares of Apple and your cost basis was below the current price, I mean, look at the money you could be making every month. Okay, I mean, you could sell this 140 covered call and easily bring in $325 for the month. And this is just one stock. I know everyone has different portfolio sizes, but I kind of specialize sometimes in the bigger account strategies and things like that. But there's lots of stuff that I do with spreads. I also like doing a lot of spreads, credit spreads and debit spreads, because, even with the small account, for instance, on a debit spread, I might alert, instead of buying these naked options, which costs over, $550, or this 136 call on Apple 30 days out, costs over $500, instead of paying that, we could open up a spread and we're basically paying the debit of the difference of two strikes. We're going to buy one and sell one. And in this example here, the difference between 565 and 505 on the bid side here, if I was to open up a call debit spread, it's only $60. So you see where I'm getting here is there's different ways to trade where we can still trade these blue chips, and these options cost $500 here. But instead of paying the $500, we can open up a spread, still get a decent, we can get triple digit returns. Sometimes I can open a spread for $50 and the return is 50. So you're making 100%. You can still make 100% on your money, but you don't need all the money to be buying these naked options. You can just open up a spread and make it more affordable for you. Okay. So those are just a quick example of yes, I do a lot of bigger account strategies, but a lot of my plays, you don't need a lot of money to play them. Okay. If you had a smaller account. So just give you an example there. So I mean that was an example of a debit spread where you don't need the full 500, only need like $50. And then of course, if you have shares of a company already, you've been holding, maybe it's a long-term hold you've had for a long time. For every 100 shares you have, that you could sell a contract, you could become an option seller. Okay, I know there's a lot of talk every day in options chat about buying options, but there's a whole nother side to this where we can actually be an option seller. not a buyer. And there's a lot of passive income strategies that go along with that. An example of a put credit spread, which I actually I got some emojis on my channel earlier because I alerted a put credit spread yesterday on Apple, already hit for 30-40% of the max gains. But in essence, just real quick, again, I'm not deep diving into any of this today, just kind of giving you a little bit example here of what I do. For example, a put credit spread. Now, this would be considered more to the passive income side. What you could do is open up a put credit spread below the price. So Apple's trading at 135. And if I think 30 days from now, if I feel confident that Apple's going to stay above, let's say 120, okay, you could actually open up a put credit spread, which would be the 115, 120. That's a 5-wide spread. And then you'd be collecting premium because you're actually selling. Overall, you're selling the spread and you're receiving credit for it. And we all know Apple's a very strong company. So in all that we need to happen, all we need that to happen is for Apple to stay above 120 by January 20th, 1 month. And we could always take profits sooner. And I like to do that if we get 50% max gains in a short amount of time. Let's say it's a 4-week hold and I get half of my gains in the first couple days or week. Why would I keep that position open for another 3 weeks if I've already captured over 50% of my potential profit? Now that's just a time management thing and how much money we're bringing in according to a certain amount of time. And if I've collected enough of the premium in a very small period of time, it doesn't make sense to keep that thing open until January 20th. I'm going to go ahead and take my money off the table and find another play. And then ultimately what that does is give us a bigger return throughout the calendar year. Okay, so just some quick examples of some of the stuff that I teach on the premium side. And I do a lot of live streams and I go over this stuff in depth. I DM with people all the time. I do a lot of one-on-ones with people. I've done some one-on-ones with people. I mean, these are 6-figure account people, we have a lot of people that are part of PB. And there's a big diversity of account sizes. And I've personally spoken with many members that have over 6-figure accounts, and I'm teaching them how to make money. They might be, have X amount of money just sitting on the sidelines, and they want to know, can I make some monthly income on this? And I'll show them how to do that. So I like doing that. Another thing that I am passionate about are fundamentals of the companies. I'm also big on technical analysis, and you guys know that because you're in all my, I see a lot of familiar faces in this room here. I'm very good at technical analysis, and I love technical analysis, but I like to back my technical analysis up with fundamental data as well. And this doesn't apply to day trading, because when we're day trading, it's all about price action. We're in and out, getting our money, getting out. I'm talking about things that companies you want to hold, for a while. And I'm big on fundamentals, and just a little taste of what I kind of teach in the premium section are some of the fundamentals we should be looking for before we buy a stock and plan on holding it for a long time. Well, we better know what the heck this company is all about. And I want to see their books. Open up your books. I want to see your books. Okay. And, just a couple simple things I look for just to give you a little taste. I like seeing the PE ratios. I like these being positive numbers. If they got negative PE, their price to earnings, not so good, might not be a company I want to hold for the long time until they can get into the positive territory with PE ratios. So just real quick, check the PEs out. If this is going to be a retirement hold or a long hold, make sure their price to earnings are good. Another thing is EPS, earnings per share. I love for earnings per share to be positive. I mean, let's just be real here. If their earnings per share is negative, there's not something right there. Maybe the company hasn't fully matured yet. There are some companies that are newer companies that, they just don't have enough data to give some accurate ratios. But, if it's a company that's been listed for several years and this and that, we got to be looking at this stuff. So positive PE, positive EPS, definitely need to see that. Just a quick rundown of the financial statements, and I'm using Webull platform here. I like to see their total assets staying pretty consistent. Even better if they're rising. I mean, and this is the quarterly. Let me go to the annual, get a bigger picture here. And yeah, Apple's been on the rise. We all know 2020 was a tough year for a lot of companies because of COVID and stuff. But 323 billion in 2020. 2021, 351 billion. And then this year so far, 352 billion, almost 353 billion. So we do have a slight rise on the assets. I like seeing year over year assets increasing. That's important to me. If I'm going to hold this company and trust this company and put my confidence into this company, they need to prove to me why I should buy them. They need to sell me. Okay. I'm not selling them. They need to sell me. And then, of course, debt to asset. We like this number to be below 100%. And these are just little easy tricks. I go in a lot more than this in the premium side. Income statement. I like to see positive net income. Okay. Of course, Apple has very much positive net income. If the company has negative net income and they're just on a decline, a good example was this. I'll show you a bad one. This is ICCM. I think they're still suspended. No, they might have resumed trading here. Looks like they fell off the cliff they were up 1,000% the other day. But what's interesting with ICCM, they pumped 1,000% yesterday, came down. I go to their financials. Look at their net income is in the negative. They're not even a profitable company. It's no wonder they went, they had a nice pump, but no wonder they had 100% retracement. These people aren't even making money. Why would you buy and hold this? There's no reason to buy and hold this company. They're not profitable. Their total revenue on a decline, and it's not even a lot. I mean, for the whole year, they made $4 million for the whole year, and they're listed as a stock. Compared to their peers, that's not a lot of money. These big companies go through $4 million at a snap of a finger. So just give you an example of, I wouldn't hold this in my retirement account just on these simple things. Look at it, negative PE ratios, negative EPS. I mean, no, absolutely not. Okay. So back to Apple, these are the things I like to see. If I'm going to hold this, especially if you're going to hold a stock for longer than a year, we already know there's good tax advantages for doing that. Instead of being taxed for short-term capital gain tax rate, if you hold the stock for more than a year, you then fall into the long-term capital tax rate, which is very beneficial. It's a lot better than the short-term tax rate. So different benefits of holding stocks for more than a year. And the cherry on top is if they pay a dividend. I mean, that's the true definition of passive income. If you're holding shares of a company and they're paying you every month or every quarter, wherever their dividend payout is, that's passive income there. And another thing I teach in the premium side is the wheel strategy. If you're looking at my screen here, just kind of a snapshot of what it means is, we pick a company with good fundamentals, cherry on top if they pay a dividend. Okay, these are companies we don't mind owning. And how we start the wheel is we're going to start selling puts, and it's going to be at a discount to where the stock's trading at currently. So like for example, Apple was trading at 135 now, and I don't mind owning Apple, and I want to start the wheel on it. I'm going to sell a put underneath the strike price because I want to try and get a discount on the stock. So maybe I sell the $125 put, try and get a $10 discount. But the beauty is we're collecting premium when we sell that put. So boom, we got more income coming in. Okay, I'm all about the monthly income. Let me see the money. And the way that I do stuff, I'm not looking for the overnight home runs, you guys. If I get it, great, I'll take it. But I want to keep my positions relatively safe. while still generating a nice return over the long run. So back to the wheel, we're selling a put on a stock at a discount, and we're getting paid to do it because now we're writing the contract. We're not buying it. We're actually writing it to sell it to someone else. Okay, now we become the sellers at that point. So I love selling puts to get discounts on stocks, and then we just keep doing it over and over again, collecting premium. If the price does breach your strike, then we'll get assigned at that point. We still keep all the money that we got paid for writing the contracts. That doesn't go anywhere. We keep all of that, which reduces our cost basis from the strike price, right? If you are assigned, then we turn around and then we sell covered calls on it. And that's what I was showing you earlier on Apple. If you had, say you sold a put on Apple, you got assigned. Okay, now, and our cost basis is in the low 130s. Well, now we can sell a covered call on the top side and collect several hundreds of dollars every month, several hundreds here. Okay. So just, again, I'm not deep diving into this, just giving you an idea. And then we just keep doing that, collecting the passive money. We just keep selling the calls. I'm going to keep writing contracts every single month, collecting these hundreds of dollars every single month. One day, Apple's going to spike up and breach my call strike, and it'll get called. My shares will get called away. If they do, the beauty is if they do get called away, not only did you say your cost basis was in the low 130s, not only did you collect all these several hundreds of dollars every time you were selling the covered calls, but so you're going to make the income on that. And if they get called away, say I was selling the 140 and my cost basis was 133, not only do I make these several hundreds of dollars on the 140 call I sold, but if they get called away, I make the difference from my cost basis to where my shares got called away. So now I'm making an extra $7 a share when those shares get called away, plus all the premium I made when I started selling puts in the beginning. I made several hundred there, made a several hundred on the call side. And then at the end of the wheel, when your shares get called away, you also make the difference from your cost basis to the call strike. So it's like a triple income strategy. You're making income three different ways doing this. So and then you just once they get called away and you collected all your profit, you could just restart it again and just sell the puts again on the same stock or a different stock if your view changed on the current stock. But good stuff there. And also, if you guys have anything to add in live stream chat, go ahead and post it in there. I'm just looking at it right now. Sergeant Brando says, let's go bull. Hell yeah. Top spitting fire session. Nice for Amy. Brecco says, does that mean I can become the casino instead of playing poker against the house? Yeah, selling options. That's a good analogy, Breckel. Selling options, we kind of go more to we're the house because we're creating the contracts at that point. So when we're buying options, we're buying the speculation, right? If I buy a call, I'm speculating that this stock is going to go up, right? When you're selling options, you're selling the speculation to people, okay? If I have 100 shares of Apple, and I go 30 days out, I mean, even up here, like, the 155 call, if someone thinks Apple's going to go to 155 in 30 days, I can make $30 for every contract I write on that. So you do kind of become the house, and I like being the house. And, there is in theory, statistically speaking, 80% of options do expire worthless. So what side do you want to be on? Okay. I want to, when you're selling options, you want them to expire worthless because we're collecting premium up front. And if they expire worthless, then we keep 100% of the premium. So I'm an option seller at heart. I still buy options, when I'm day trading, and of course, when I do call debit spreads or put debit spreads, any debit spreads that require a debit, I'll still pay. But even the debit spreads, even though you're still paying, the same principle applies. That the thing is, if you sell a debit spread, we basically just need the price to be above our short strike. So on Apple, if I did a debit spread, I'd buy the 135 and I would sell the 136 to give me a credit to where this option is only going to cost me what, $55 for the spread. And the beauty of the debit spreads, even though we're paying a debit, is we just need Apple to be above 136 and we get 100% of the premium. So there are still some things that are in common with credit spreads compared to debit spreads, as far as the width of the spread and what we actually need to happen. But comparing that to actually just buying naked options, I mean, those things could expire worthless. And the theta decay, if you're paying too much, maybe you bought it when the implied volatility was super high, and then I get this message all the time. Someone buys a call option, and the price is actually going up, but their call option they bought isn't making them any money. It could even be going down. The most common answer to that is when they bought the option, the implied volatility was too high. And what happens as soon as the IV comes back to reality, that's the Greek, the Vega Greek, which is right here. So for every 1% change in the IV, the value of that option contract is going to change. In this example, it's by $15, 0.15. So be careful when you're buying options. If it has super high IV, you probably only want to day trade that, because if that IV comes crashing back down to earth, you're going to lose money on that, even if the price is going in your favor. Okay, so that's the tricky part with the Greeks. Sometimes the price can do what you want it to do, but depending on what the values of the Greeks were when you bought it, it's going to put a lot of weight on whether the play works out or not, and how long you should probably be holding that. And I take a deep dive into all this in the premium section as well, because I do see a lot of new names here. I'm assuming this is a lot of open house people. So welcome, you guys, to the open house. We had the welcome stream. I think it was 8:45 a.m. And then we had Lee come on for swing trading. We had Amy come on for day trading and momentum trading. I was listening on YouTube when Amy was doing her things. Lots of great stuff Amy talked about. So welcome, everybody. We can kind of just look at some candlesticks if you want. Top says KSCP has a new high a day. So let's KSCP. Let's take a look at it. This is Night Scope. Okay, yeah, so new high a day for them. They're up 14.47%. Okay, and if you're looking at my screen, you notice I don't have too many indicators. Let me go ahead and just mute that real quick. Sorry about that. If your server muted, you can type into live stream chat with your keyboard, and we can answer questions there. But KSCP, very interesting here. But like I was saying, I don't use a lot of indicators. A lot of people do, and their chart just starts looking like one of those hurricane spaghetti models, and I'm not really down with that. So I keep my indicators relatively easy. I do like the RSI. I don't even really need the MACD. I do like looking at the MACD because I like seeing the histogram candles change from green to red, and of course the MACD line, whether it's on the upside or downside of the signal line, can tell us some momentum there. But truly, all I really need is price action and RSI, to be honest with you. And then I do like using some Fibonacci retracements when I can. But just at a bird's eye view with this KSCP, I'm on the 1 hour chart right here. And I mean, ideally for this stock here, we've been in a downtrend. I like what it's doing today, but we haven't quite gotten above the trend line, and these trend lines aren't exact, you guys. I get that asked a lot too. People are like, it needs to have 3, 4, or 5 touch points, this and that. What we're trying to get a feel for is just the direction of where the stock's been trading, and of course we do like at least a couple touch points. Okay, if you got at least that much satisfied, you can go ahead and draw your trend line out. Because it's either going to break or not. 5-10 cents on this $1.50 stock, it's not. If it's going to break, you're going to know when it breaks. It's going to be like a 20, 30, 40% move. But we're getting back up to our trend line here on KSCP. So if things work out and hold up. We could see definitely, and this trend has been going on since November 1st. So about a month and 3 weeks here, hit this high at 365. Another interesting you can do for technical analysis is if you don't really like drawing trend lines and you just want to get some levels, this would be perfect to kind of give us an idea if this was a true bottom that formed basically towards the end of the day yesterday. Also, I do see y'all's questions in the live stream chat, and as soon as I'm done explaining this, I'm going to get right to it. But if we want to figure out, is this a true bottom here at $1.35? Well, easy Fibonacci retracement here from the previous high from back in November 1st when it hit $3.65. We're just going to draw it from the high up here down to the low. Okay, and these are going to be these are not going to be day trading levels. We can do a different retracement for that, but for the overall downtrend here, we got to get. I would like to see it retrace to $1.89 if possible. Some traders do set this to 12%, the first one. So we can, 12, and then the 38, they'll usually change to 25. Those are usually good setups there. Gives us some, and it kind of lines up too, where it kind of hit its head the other day. So $1.62, I would like KSCP to get above $1.62 for continuation to a possible retest of $1.92 there. And then we can look for confluence areas like right here. Probably $1.79 would be another level here where it kind of dipped down and kind of hit its head there. Sellers did not like it going up that high, and you see how big that wick is. Sellers just said, nope, we're shorting it. Let's go. So this will tell us as well, if we lose this 135, we're not going to be retracing to the upside, right? Which means this 135 was not the real bottom. But this will give us a good idea of the levels to the upside that I would feel comfortable breaking to really have some confidence that this is getting out of this overall downtrend. So it's right. It's almost to decision-making time to $1.62. A break above there and a hold, that could be an easy trade from $1.62 to the 190. That would be 20% return right there. And just be a little patient because obviously we missed it. We missed the pump this morning. You don't want to chase this. Now we know, this 162 area might even be the mental level of 160 because you can see, the level kind of pops out on your chart at you, kind of right about there. And I'll make this red since I don't want to get confused with my fib lines. But this is where it's had trouble with back here. December 16th, about a week or so ago, had trouble getting above there. Right here again, just got rejected right here. Bulls tried to push it up again on December 19th. It just couldn't even hit it at that point. And here we are again. So now we kind of have like a little zone, right? We got the 162 fib. And then we got it's basically going to be probably one. Yeah, we got that little green doji guy there. It's probably going to be right around. We could just. I do like mental levels. I like including that in my analysis. So I'm just going to say $1.60, you guys. So I would like for it to break $1.60, and of course $1.62, and kind of just hold up around there. If it starts trading sideways right there, that would be a perfect setup, you guys. I like when stocks start trading sideways before I enter the play. If I see something trading sideways, that is a perfect opportunity and setup, you guys, because it's either going to break one way or the other. And the beauty is, if we have a bullish bias, and let's say this price action does break above 160, 162 area and hold, starts trading sideways, now we know we can go ahead and go long. These are plays that you could go a little bit heavier on. I'm not recommending that because I like to play. I've been playing, we need to be playing small in the kind of market we've been having. But theoretically, these are the setups where, you can go ahead and enter the play, maybe 100% of what you plan on putting in, and just keep that tight stop loss right below 160. Because we know if once it trades sideways, we know once it breaks structure to the downside, you might as well just get out of the play. Don't be hoping and praying, just get out. Ideally, obviously, if we're going long, this thing's trading sideways after it broke the level we were looking at, it's trading sideways and it takes off. That's the beautiful moment, of course, because now we can move our stop up above our entry and just let that thing ride. Every time it consolidates and trades sideways, you move your stop up below that. It could do that 3-4 times during an uptrend. So that's the beauty. So just a couple things there. So top, that was on KSCP. Appreciate you pointing that out. And again, just to summarize, we kind of already missed the pump. It went from 135 to almost 160. Kind of missed out on that, right? Why would you enter up here? Just honestly speaking, you guys, why would you enter up here? There should be no reason. We missed it. Accept the fact that you missed it. If you can't accept the fact that you missed it, you're going to get FOMO. You got to leave the FOMO at the front door, you guys. If you're bringing FOMO in your pocket with you when you're trading, this is not going to be it for you. Just put your money in a 60-40 Vanguard and move on with your life. Please don't live in misery when all we need to do is look within ourselves to find the answers. And it's all about emotions. There was a request. I had this popular trading journal entry I wrote a couple weeks ago. Excuse me. And I keep getting asked to read it. So some of you might have heard it before, but let me just read it again, because every time I read what I wrote, it's so true. So basically, generally speaking, emotional traders freak out. Okay. They wait to see if there's going to be a change in direction. They start to hope it'll turn around. They average into their mistake. Oh my God, that's such a thing. Don't be averaging into your mistake, you guys. You're just going to bleed yourself dry. Does it sound familiar? Me personally, I've lost and won, tens, thousands of dollars in a single day, couple times a day. And emphasis on the lost part. It doesn't feel good when that happens. And then when you win on a winning day at those numbers, you just filled with euphoria. But once I got used to those feelings, I started to recognize trading for what it is. It's a game, you guys. And to win the game, we need to be right more often than we're wrong. Okay. And I always tell people, if you're trading and you got like 5, 6, 7 losses in a row, you need to take a step back. Go back to paper trading. I still paper trade all the time when I'm testing out new strategies with my advanced options and stuff. Paper trading is not a bad thing, but you got to be able to prove to yourself that you could be consistent. And instead of 5, 6 losses in a row, maybe you need to paper trade until you can get 5, 6 wins in a row, and then come back with your real hard-earned money. So you got to be right more than you're wrong. It's very important. And if you're wrong more than you're right, you need to go back to paper trading and fine tune your skills. The more practice that you have, the better you're going to get. That's with anything in life. I don't care what it is, athletes or, different jobs and just anything in life that you have to do. The more practice you have, the better you're going to get, you guys. Might as well do it on paper money. And then at the same time, we can use that to prove to ourselves that we can be right more times than we're wrong. And then we can start putting our real hard-earned money into it. So you got to take accountability for your mistakes, you guys. Generally speaking, I try and stay humble. Okay. I try and sharpen my conviction. I try and work on that anytime I can. And if you need to stop out of a play, don't be moving your stops. Oh, I'm gonna move my stop down and give it some more room. You're probably just throwing gas on a fire there. Do yourself a favor, just stop out of the play. Yes, it'll feel humiliating at first, but you know what the funny thing is? Humility reinforces your discipline, does it not? And if you work on your conviction and, put it this way, discipline plus conviction plus technical analysis should equal consistent profitability. All right. So discipline's a really big thing. You got to humble yourself sometimes, humiliate yourself, because that humility will turn around and be reinforcement for your discipline. Always. You'll be a better trader because of it. And the truth is, if you don't have one of those variables, you're not going to be consistent. Okay. Yeah. Hello, I'm Kelly. Trade with conviction or don't trade at all. 100%. If you're not trading with conviction, just stop out of the play before you're down 30, 40%. Do yourself a favor. Why are you just gonna, and the more it goes against you, the more madder and madder you're gonna get at yourself. Why do that to yourself? You're gonna torment. Why torment yourself? You shouldn't be tormenting yourself when you're trading. Okay. Either the play works out or it doesn't. And if it doesn't, sell your position, give yourself a little bit of humility, because that humility is going to reinforce your discipline. And sometimes, now for me, when I stop out of the play, those are the easiest losses to own now, because I know what it's going to do. It's going to make me more disciplined moving forward. Selling that loss frees us. It gives us a feeling that, okay, we're free now. And then what happens when you feel free? Well, now maybe you can see the clear direction the market wants to go, and you're not poisoned by your play that you should have stopped out of. You just poisoned your mental capacity. You're not able to see things clearly at that point. But you know what happens when you finally say, this play, go back to your original trading plan, and you'll see that you should have stopped out of that play a long time ago. And what happens when you stop out? You free yourself. You just freed your mind, like in the Matrix, right? Hey, I see. We're gonna answer questions at the end here. I got this recorded. Yeah. So we got to be able to get out of plays that didn't work out, so you can free your mind. And the purpose is, once your mind is free, then you can see the clear direction. Everything becomes a lot more clearer because you're not poisoned by that stupid play you did. Okay. And then once you see the market the way with a clear and free mind, your next winner is more than likely going to make up for that loss, because now you got a free mind. So you have to stop feeling. You got to start thinking. Okay. Think is greater than feel. All right, please write it down. So, another thing, when you're trading, if you have this constant feeling of frustration, every trade you take, you're feeling frustrated or scared, or maybe you're irritable. Maybe that irritability turns to anger. You will trade like crap if that's how you're feeling. Okay. So you got to be able to master your fear, or you're going to get mastered by the market, and you don't want that to happen. Okay. So you got to be in a good state of mind. Maybe in the morning, I don't know, do some relaxation techniques, maybe some affirmations in the mirror. Tell yourself, I'm going to make a mistake, but it's okay, because I'm going to learn from it. Be a little more optimistic about what you're capable of for yourself. And some practical advice, if you're in a trade, you're sitting on the edge of your seat, you're anxious as hell, you're starting to get irritable, hoping the trade starts to go in your direction. Well, if that's what's going on, then you probably already lost the trade. Okay. So just sell your position. If you're not thinking, you're not trading. You can only win consistently if you're disciplined and objective. Okay. Feelings are not objective, you guys. I don't care if you're mad at Jerome Powell for not being hawkish at the last meeting, or, it doesn't matter if you think the economy is trash or stocks shouldn't be rallying. You're telling yourself, why is the stock rallying? This market's crap. You're not thinking. You're being an emotional. Okay. You're being an emotional person. People that think don't say stuff like that. Okay. So, your feelings are blinding the obvious facts right in front of you. It's emotional dysregulation goes two ways. You make bad decisions when you're really mad and when you're really happy. So don't think, again, you need to think, don't feel. If you're constantly on the edge or in your feelings, then you're probably trading with positions that are either one, too large. Number two, the expiration date is tomorrow. Why the hell are you doing that? If you plan, it should only be a day trade. You should be closing that out before the bell rings. So if you're constantly on edge or in your feelings, either your position size is way too big, or you got a close expiration date. You need to start toning this stuff down. Okay, you've just already proved to yourself what you need to work on. Tone that stuff down. It's not going to help you trade, you guys. Less will always be more. Me and Patrick were talking about that the other day. Less will always be more. Learn how to trade calmly, and then repeat that with success. You can increase the intensity at that point. If you can learn to trade calmly and you have repeat success, okay, now maybe we can scale up. Maybe instead of one contract, all right, let me go to two now. I just won 5 in a row. I didn't get emotional. I did it calmly, and I produced successful results repeatedly. Okay, maybe you can scale up now, but until that happens, you shouldn't be scaling up, if you're trading with emotion. So, and again, I said this earlier, every morning before you start trading, you look yourself in the mirror, coach yourself, you tell yourself, you're going to make mistakes today, but that's okay. We're going to learn from it. Don't make your bad trades make you a bad trader. Okay. Because you're getting in your emotions again. Couple tips, trade with the direction of the market. Try not to anticipate stuff too much. Oh, the stock rallied, you can't go up no more. Yeah, it can. And it will. So try and trade with the trend. That helps a lot. I've said this to people before, and that helps. Trade with the trend. If it's trending up, start thinking, okay, let's wait for a pullback, and then we'll trade, and then we'll get in and trade with the trend. So we got to start thinking. Stop trying to catch a falling knife. Oh, yeah, I get this. The stock can't go down anymore. Oh, yeah? Hold my beer. That thing will go down more. All right. So you guys can't be playing these mental games with yourselves. We just got to have more discipline. Okay. We got to buy in strategically on pullbacks or reliefs and things of that nature. So, and again, I think Kayla said it as well. It's a favorite trading saying of all time: trade with conviction or don't trade at all. Someone needs to hear that. All right. So it's about 12:20 p.m. Got about 10 minutes before the next speaker comes on here. So let me just go through some chat here. Let's see. Okay, top got in the KSCP. He was in at 147. Looks like he's already in the green, so he put a stop loss above his entry at 154. Congrats on that, top. Nice trade there. What? And people are scared to put their stop above entry because, oh, well, I'm going to get stopped out and I'm going to miss out on the gain. But I'll tell you one thing: I'd rather get stopped out at break even than stop out at negative 20%. Wouldn't you? Because think instead of feel. Think about it. If you get stopped out at break even, you can always re-enter. It'll be a brand new, fresh, lovely play. You can re-enter. Don't be scared to get stopped out at break even. I would rather get stopped out 10 times a day at break even than get stopped out in the negative. Those are wins, because the beauty is you're not at a loss. And you can always re-enter, and more times than not, you get stopped out at break even. When you go to re-enter, you usually can get a better price than you had the first time. Okay, so we got to start being realistic with ourselves. and leave your emotions at the front door. They're not allowed in the house. I'm locking them out. We're going to think and not feel. Okay. Great trade top on KSCP there. Great managing the position there. Kayla says, staring at a loss that just keeps growing every day can kill your vibes. Oh, 100%. I mean, talk about getting in the wrong mental state. And it's just something that you're carrying day in and day out. You're going to bed at night. Oh man, why didn't I get out of that when I was supposed to? You know, you're asking you know what everyone does when you're trying to go to bed at night. You got all these thoughts running through your head, and it's a reflection point. It really is, and you can lose sleep doing that. So yeah, that's exactly right, Kayla. You know, staring at a loss that just keeps getting deeper and deeper in the red. You're gonna lose your mojo. You know, you're gonna lose your mojo, and it's not gonna be good for trading. Icicle said, "Oh, he didn't realize he had a hot mic. No problem, my brother. No problem." Keanu Reeves, why is my favorite guide muted? Oh, yeah, I think he had a hot mic. I can unmute him and see if he fixed it. But so yeah, so top looks like, yep, looks like you're good to go there. Sorry about that, top. Patrick said, trading shouldn't be stressful. Used to be addicted to stress. Yeah, I mean, definitely. If trading is stressful, you need to take a serious step back before you lose your hard-earned money. You know, time to go back to the education part of it and perfect our skills, learn about new strategies, read a trading book, maybe re-enroll into Penny Boy University and come to all the streams again. Oh yeah, just so everyone knows that are open house members here, we do have an 8-week education course in the premium section that's included with your premium membership. So it's nothing, no additional cost or anything like that. And even for the premium members that are in this chat right now that have been here for a while, I'm sure Duck probably told everyone, but we revamped the entire Penny Boy University. 8 new education classes. They're pretty different than the first PBU that we had. And I think this just rolled out this month. So the December class was the newest class for the revamped education course. So if anyone wants to re-enter that, we got new classes up, and of course I teach the semester 2 classes. Yeah, Kayla says, you know, speaking of stocks that can't go lower, look at Tesla. Yeah, I mean, geez, that thing can't catch a break. I mean, yeah, it's still trending down. I mean, it had a nice pop in pre-market, and yeah, this was someone asked me. It was like 2 days ago. They asked if it was okay to go ahead and enter Tesla, and no, I don't think it's okay. Okay, I mean, I told them that, and they actually sent me a DM. It was last night, thanking me because they would have entered up here and they'd already be down pretty significant. And I would assume they were referring to options. If they bought in around 150 when they asked me, and I can't tell people when to buy and trade, but I told him I wouldn't go long. Okay, I mean, I gave him my chart. I said until Tesla gets above this yellow line, I'm not going long on this thing. Why would you? You're going to enter, and Tesla's just going to keep falling. And from some previous analysis I did, I think 125 is very much in the cards for Tesla. Okay, that's the bottom of this consolidation area from back in 2022. The bottom of Tesla's consolidation area during this period of time. And it's about 150 to 125 is kind of the zone. Yeah, about right here. You know, I'm kind of looking closer to the current price than back here. It was really choppy. But when it really started trading sideways, it's basically 150 to 125. We're already below 150, you guys. This thing could hit 125. And I think one of the levels I had was this tiny little gap that needed to be filled on Tesla, which never got filled. And it was from 2020, you guys. The top of this gap was 137.85. I zoomed in on it the other day. Yeah, it was about, oh, actually, what, 137.70-ish? We could call it like 130, the mid 137s. This is the point it needs to hold, you guys. If it doesn't hold, I think 125 is very much in the cards. Hit 126.37 down here. in the past. That would be the next level down I'm looking at. If Tesla cannot hold where it's at right now, this thing's going to the low 130s, I think. Just my personal opinion. But yeah, the person I was coaching the other day, they sent me a DM last night, like basically saying, "Thank you so much, man. I'd be down 50% if I didn't ask you your advice." So, we just got to be realistic about these charts. Why would you go long here? I'm not going long until we can get out of this downtrend that started at about the middle of September, is when Tesla was at $313. You guys, can you believe that? Just into September, October, November, December. That's only 3 months. We went from 313 to 135. Yes, it does seem like, how much more low can it go? But don't ever say it can't go lower, because as Kayla pointed out, it can. All right, so just going through some comments here. Let's see here. Yep, absolutely. Top says, many thanks, sir, Mr. Swinging Bull. Spitting fire session here. Yeah, appreciate it, man. I'm not scared to get in the trenches. Keanu Reeves said, I said to myself that Snap can't go lower, so I bought more, and it went lower. It's happened to me before too, brother. And Snap has just gotten beat to hell. As well as a lot of other tech companies, of course. It just hasn't been. 2022 was not the year for tech. I'm telling you, it just was a bloodbath. But yeah, definitely got some potential on Snap for the upside, but hit a low of 733. Ouchie, ouchie, ouchie. We got a level here, almost 480 to $5. Got another level here. Found a bottom around 8. Yeah, so Snap. This actually, we did break below 8 here because of a gap down. That's not really true trading price action for me. And it of course went on and filled that gap. So that gap is kind of just like a glitch in the matrix. I think it got filled so quickly, literally the next day. I really think $8 is the zone for Snap. We got to hold $8. You could potentially go long here with the stop loss under $8. That's going to be less than a 10% stop loss. So that's great risk management there. Keep a tight stop. You could probably just do 10% stop, put your stop maybe at 775. Keep it really tight, 775 or to $8. You could go long here, try and get a nice swing or Ruski, nice little swing play. But keep that stop at 8 or the high 7s, and don't change your mind about it, because if Snap loses that area, I just showed you, we already know, kind of held up around 789 right there. Yeah, so I'd like a stop maybe around 785-ish. But we know if it doesn't hold that, this could be very bad news for Snap back to the $4 or $5 range. Easy play, easy free alert for you guys right there. Just keep, you could go long here. Looks like we got 2 green days in a row. I'm liking what I'm seeing. Go long here. Keep your stop about $7.80, $7.90. If you get stopped out, so be it. Move on to the next play. But the setup is there. We could probably take this. Shoot, we got a little tiny gap right here. Could probably fill to the low $9 range. It is almost 12:30 p.m. So the next speaker is going to be coming on here. I believe it's going to be Taylor, and she's going to be. Okay, great. Yep. So I'm going to go ahead and end my recording, and then I'll stop sharing my screen so Taylor can kind of take the wheel here. But I appreciate everyone coming out to the stream. Welcome to the open house. If you're not a premium member, this is just a taste of what we got for you guys. Okay. But thanks for joining, and I'll see you guys next time. Cheers, everybody.